Our agenda for today's webinar is as follows. We'll do quick introductions, review the goals and methodology of the report, discuss director profile, board profile. We'll have some words on the IRC's Institute's perspectives on the report, and then we'll take your questions. In terms of logistics for today's webinar, all the attendees are in listen-only mode, but we do encourage your questions. Throughout the session, you'll see on your control panel there's a question function. You can type any questions in for the report authors or John, and we will read those aloud at the end of the presentation and respond. This session is being recorded, and a replay will be available by tomorrow on the IRRC website at www.irrcinstitute.org. Also on that website will be all of the report materials as well as a copy of this PowerPoint presentation. We encourage you to join us on social media and post information about the report if you're so inclined. Our Twitter handle is @IRRCResearch and @ISSGovernance. If you should have any audio issues or technical issues during the webinar, please contact GoToWebinar at 1-800-263-6317. We have several speakers on the webinar today. First up will be the ISS. Patrick McGurn will kick us off. Patrick is Special Counsel and the Head of Strategic Research and Analysis at ISS. Pat is considered to be a leading expert in corporate governance issues, and he plays an integral role in ISS's policy development. Pat serves on the advisory board of the University of Delaware's Weinberg Corporate Governance Center and is a member of the Council of Institutional Investors Market Advisory Council. Pat also will be joined by his co-authors, Andrew Borick and Zachary Friesner. Pat will say a few words about their background when he begins his presentation. Also today on the webinar, speaking will be John Lekumnik. He is the Executive Director of the IRRC Institute, where he's served in that role since its founding. With the board, he's led the organization to become a leading source of objective academic and practitioner research on a whole host of investor issues. He has decades of experience as an institutional investor, including time as the investment advisor to the New York City Pension Fund. And John also is author of the 2016 book, What They Do With Your Money, How the Financial System Fails Us and How to Fix It, published by Yale University Press. Just a couple words about the IRC Institute if you're not familiar with the organization. It's a nonprofit that was established in 2005, and essentially what the organization does is funds and disseminates objective and unbiased research on a range of issues of importance to investors. We have a research award. The deadline for that is October of this year, so if you have an interest in that, please take a look at the website. There's two $10,000 awards for that annual prize. And we also have more than 60 research reports available on the website at no charge, so we encourage you to take a look at those as well. And with that, I'll turn it over to Patrick, and he will tell you a little bit about ISS and then dive into the report. Patrick?
Great. Thanks a lot, Kelly. I think this study was, again, a labor of love for our authors because it was a chance to really get your teeth into a cutting-edge issue. It grew out of a larger report on board refreshment at S&P 1,500 firms that ISS authored and IRCI published at the beginning of 2017. In that study, we provided literally a mountain of data about board refreshment trends. So this add-on study extends that research by taking a look at what appears to be one of the biggest drivers of recent refreshment, namely shareholder activism. Joining me to discuss the findings are two experienced members of ISS's research team. First up will be Andrew Borick, a member of the ISS Special Situations Research Group. SSR, as we call it, takes the lead in contested situations, so Andrew is very familiar with the activism scene. He'll cover the major findings of the study with respect to the nominee pool that was fed by the spring of shareholder activism from 2011 to 2015. Next, after Andrew's done, we'll turn to the broader boardroom refreshment scene with Zachary Friesner, who covers the financial sector as part of ISS's U.S. research team. Zach will talk about the impact of activism on the makeup of boards, looking at them before an activism event and then seeing the changes that occurred at the end of it. So moving to the first slide in the presentation, Andrew, let's start with the basics here. What were the goals of the study and how is it structured?
Well, we all know that shareholder activism is among the most visible and hotly debated topics in the modern corporate world. But unfortunately, the majority of the focus has lied on the impact of activism on shareholder value and the methods that have been used by activists to drive change. And so we wanted to, I guess, explore activism from a slightly different angle. We put this study together to address the impact that shareholder activism has on boardroom demographics. And we approached the data from two perspectives. First, we examined the demographics of individual dissident nominees on ballots and proxy contests, directors who were appointed in settlements with activist shareholders, and directors who were appointed unilaterally by boards in connection with shareholder activism. And second, we examined demographic changes to board profiles made in connection with public shareholder activism. And so we looked at the data on both the individual director level and the collective board level.
So Andrew, why don't we discuss the methodology and scope before jumping into the findings? Could you provide a quick overview?
Sure. Well, I guess the study examines the impact of public shareholder activism on board refreshment at S&P 1500 companies from January 1st, 2011 through December 31st, 2015. And we considered public shareholder activism to be any form of activism that was publicly disclosed, and all data was captured as of the applicable shareholder meeting date. And in total, we identified 93 companies that experienced shareholder activism during the study period, and we actually collected data on 380 individuals.
Great. I think, okay, now you mentioned that the study was divided along the lines of individual director demographics and then changes in the broader boardroom profiles. What were some of the key takeaways from the individual director demographic segment?
Well, I guess from a 30,000-foot perspective, public shareholder activism generally leads to younger, more independent, but less diverse board candidates with previous board experience and relevant professional pedigrees. It also appears that activists favor nominees with financial experience, while incumbent boards favor nominees with executive experience.
Okay, so that's it in a nutshell. Let's break that apart a little bit now into its component parts. So activism, you say, is translating into an infusion of younger candidates into boardrooms?
Yes, study directors were generally younger than their counterparts across the broader S&P 1500, and this was regardless of who recruited them. Dissident directors, and I guess for purposes of this discussion, dissident directors are the study directors who are dissident nominees on ballots and proxy contests or appointed in settlements with activist shareholders. They were an average of 53 years old, while directors appointed by incumbent boards at activist-targeted companies were an average of 56.6 years old. And when you compare this to the average age for all S&P 1500 directors, which was 62 and a half years old in 2015, it's pretty clear that there's a preference for younger blood in these activist situations. So we found that activists were more likely to tap directors from a broader age range than incumbent boards. In my opinion, one of the more interesting stats relating to director age is the breakdown of study directors in their 30s. Nearly 14% of dissident directors were in their 30s, but only one board appointee, who accounted for less than 1% of the total board appointees, was in his 30s. And this was easily the largest divide in terms of age-related metrics. We also identified a correlation between age and company size. Study directors at larger cap companies tended to be older than their counterparts at smaller cap companies, with the exception of incumbent board appointees, who are an average of just under 56 years old at S&P 600 companies, 56.7 years old at S&P 500 companies, and 57.3 years old at S&P 400 companies.
Great. Kelly, you could skip one more slide. I think so study directors tended to be younger than their S&P 1500 counterparts, but you said they were also less diverse. What exactly was the impact of activism on gender diversity if you're looking at the pool of nominees?
Well, just 8.4% of study directors were female, and the majority were selected in the latter years of the study period. There were actually only 7 female study directors selected over the first 3 years of the study period. There was a shift in 2014 as more females were selected, but female representation nonetheless continued to lag that of the broader S&P 1500. For example, in 2015, which of course was the final year of the study period, females accounted for 16.5% of directors in the S&P 1500, but only 13% of study directors. Females also accounted for nearly a quarter of new S&P 1500 directors in 2015, which is nearly twice the percentage of female study directors in the same year. I think that one of the more important findings from the study is the fact that 3 activist funds, Starboard, Engaged Capital, and the Clinton Group, accounted for over 3/4 of female dissident directors. And this really wasn't just a case in which the funds just recycled nominees. There was actually only one female dissident director who was selected more than once, and that was Cynthia T. Jamison. She was selected by Starboard at both Darden and Office Depot.
Okay, so a definite lag on gender diversity. You said there was a similar impact on racial and ethnic diversity in the candidate pool as well.
Yes, of the 351 study directors for whom demographic information is available, only 16 individuals, and that's actually less than 5%, were classified as members of a racial or ethnic minority group. 5 were African American, 2 were Asian, 3 were Hispanic or Latin American, 2 were Indian, and 4 were Middle Eastern. And to put this in perspective, just over 10% of board seats across the broader S&P 1500 were occupied by minorities in 2015. So I guess similar to the data on gender diversity, we're talking about a major disconnect here. We also compared the gender and ethnic data to determine the extent of overlap in study directors, and we found that there was only one minority female study director, and that was Linda R. Gooden. Linda is an African-American woman who was appointed by the General Motors Board in connection with shareholder activism in 2015.
Just staying on the diverse nominees for a second, how did those directors stack up in terms of age?
Well, the female study directors were slightly older than the average study director, but minority study directors were slightly younger. Interestingly enough, though minority study directors were younger on average, they were most likely to be in their 60s, while study directors in general were most likely to be in their 50s.
Okay, let's move on from diversity and start to spread out to some other issues. You mentioned in the intro that study directors also tended to be more independent. Do you mind fleshing that out?
Sure. Well, study directors, not surprisingly, were more independent than their counterparts across the broader S&P 1500. Based on ISS classifications, 92.6% of study directors were independent outsiders, while 2.6% were affiliated outsiders and 4.7% were insiders. And this is compared to the S&P 1500, where 80.9% of directors were independent in 2015, while 14.3% were affiliated and 4.6% were insiders. And just to be clear, independence was measured on the basis of separation from management rather than separation from the dissident. One of the more interesting trends that we uncovered was the year-over-year progression in independence among study directors. The proportion of study directors classified as independent outsiders increased more than 5 percentage points over the course of the study to 96.7% in 2015, while the proportion of study directors classified as insiders decreased more than 5 percentage points to 3.3% in 2015. And over the same period, the proportion of all S&P 1500 board seats held by independent directors increased just over 2%, while the proportion of board seats held by insiders decreased just over 1%. Study directors were also more likely to be independent outsiders or affiliated outsiders when activist shareholders contributed to their selection, and they were more likely to be insiders when they were appointed unilaterally by boards. Of the 266 dissident directors, 95.1% were independent, 3.4% were affiliated outsiders, and just 1.5% were insiders. By comparison, of the 114 board appointees, 86.8% were independent, just under 1% were affiliated outsiders, and 12.3% were insiders.
Great. Sticking with independence for a minute, did you find any relationship between the independence and the gender, race, and age of the nominees?
Well, the 32 female study directors, 30 were independent outsiders, 1 was an affiliated outsider, and 1 was an insider. And of the 16 minority study directors, 15 were independent outsiders, and 1 was an insider. So in both cases, independent outsiders accounted for just under 94% of study directors. With respect to age, insiders tended to be youngest, followed by independent outsiders, followed by affiliated outsiders. Among study directors who were independent outsiders and affiliated outsiders, dissident directors were younger on average than board appointees, but among study directors classified as insiders, dissident directors were older on average than board appointees. And this latter point, of course, runs counter to the general trend, which was that board appointees tended to be older than dissident directors.
Now let's talk about the depth of boardroom experience. You indicated that along with greater independence, the study directors also tended to have prior board experience. Could you provide some details on that?
Sure. Well, more than half of study directors, 55% in fact, held outside board seats. The majority of these individuals sat on either 1 or 2 outside boards. Activist shareholders and boards actually selected these multi-board study directors at approximately the same rate, though the average number of boards that multi-board study directors served on ended up decreasing through the course of the study period. The average multi-board study director served on 2.1 outside boards in 2011 and 1.5 outside boards in 2015. Female and minority study directors were also more likely to serve on outside boards than their Caucasian male counterparts. 58.5% of Caucasian male study directors served on at least 1 outside board, 62.5% of female study directors served on at least one outside board, and 75% of minority study directors served on at least one outside board.
Okay, let's turn to the resumes now. I think, what did the general trend look like with respect to occupational backgrounds of the nominees?
Well, corporate executives and financial services professionals each accounted for about a quarter of study directors for whom data is available. Investors generally favored investment professionals, and incumbent boards generally tapped sitting executives. Dissident directors were nearly 3 times more likely to be financial services professionals than board appointees, while board appointees were nearly twice as likely to be executives than dissident directors. The findings also shed light on the relationship between background and market cap. Consultants and retirees were more likely to be selected at larger companies, while financial services professionals were more likely to be selected at smaller companies.
And a couple of related issues. What about financial expertise and CEO experience as well?
Well, ISS classified 22 study directors as financial experts, and these financial experts were most likely to be selected at the larger cap companies. 14 of the 22 financial experts were selected at S&P 500 companies, 4 at S&P 400 companies, and 4 at S&P 600 companies. 29 study directors were the CEO of an outside company or previously served as CEO at the company at which they were selected. None of the outside CEO study directors were female, and there were only 2 unique minority CEOs, Jose Maria Alapant and Sardar Biglari. 23 of these individuals, which is nearly 80%, served on at least one outside board, which was roughly 25 percentage points greater than study directors as a whole. And similarly, 16 of the 22 study directors classified as financial experts, which was more than 70%, served on at least one outside board. And I think that about wraps up the individual director demographic segment. Pat, I'll send it back to you and we can move on to the collective board profile discussion.
Great. I think, thanks, Andrew. And Andrew will be back for the Q&A segment later on. But now let's turn to Zach to talk about how activism events actually impacted the makeup of boards. Zach, what were the overall findings of the study with respect to the impact of board refreshment, I think, of activism on board refreshment?
Sure, Pat. The differences between the before and after pictures at study companies largely reflect the nominee pool that Andrew just profiled. That snapshot shows that shareholder activism generally resulted in boards that are younger, shorter tenured, slightly larger, more independent, and more financially literate, but less diverse than their pre-activism versions.
Okay, so let's zoom into that snapshot. I think, what exact impact did activism have on average age and tenure?
In a nutshell, activism turned back the clock and reversed the normal boardroom aging process. Activism-related turnover led to drops in both average director age and average board tenure at targeted companies. The average director age decreased by 2.6 years to 59.6 years on boards targeted by shareholder activists. Average director tenure on those boards decreased by 3.4 years to 6.1 years. To put this into perspective, for the broader S&P 1500 in 2015, average director age was 62.5 years and average tenure was 8.9 years.
Wow, that's a pretty significant impact. Did this overall refreshment surge, especially that there were a large number of settlements that added directors to boards, cause the actual size of the boards that were subject to activism to swell?
No. Somewhat surprisingly, board size remained relatively steady despite the large number of boardroom roster changes. Average board size at the companies in the study increased from 9 to 9.4 seats. Given the influx of dissident nominees, the size increase of less than half a directorship on average was unexpected. Notably, less than half, or 41.9%, of these companies experienced a post-activism boost in board size. Nearly 1 out of every 5 of them actually experienced a decline in board size following shareholder activism. It was status quo for board size at 39.8% of study companies.
Wow, interesting. I think, what about the independence levels overall on the boards that went through activist events?
Sure. Board independence increased at companies targeted by activists. Average board independence at study companies climbed from 79.5% to 83%. More than 60% of these companies experienced an increase in independence. Around 20% experienced a decrease, and 18.3% experienced no change at all. By way of comparison, average board independence in the S&P 1500 was 80.6% in 2015.
Let's switch to that boardroom experience issue. Did activism result in just a bunch of overboarded directors adding more seats to their collections?
I'd say no. Other boardroom service was generally unchanged by activism-fueled refreshment. The average number of outside boards on which study company directors served remained virtually flat, climbing by 1/10 of a percentage point to 0.9. There is a correlation between company size and outside board service, though, as directors at S&P 500 and S&P 400 study companies sat on a higher average number of outside boards than their counterparts at S&P 600 study companies.
Okay, let's change gears and look at diversity. Did activism impact overall diversity levels across the boardroom universe you looked at?
Activism was accompanied by an erosion of gender and racial/ethnic diversity on targeted boards. Study company boards were less likely to have at least one female director following an activism campaign than they were preceding one, decreasing from 87.1% to 82.8%. Also, according to the Board Refreshment Trends at S&P 1500 firms, the proportion of S&P 1500 companies with at least one female director increased from 72% in 2011 to 82.7% in 2015. Similarly, study company boards were less likely to have at least one minority director following an activism campaign than they were preceding one, decreasing from 55.9% to 51.6%. In sharp contrast, the portion of all S&P 1500 companies with at least one minority board member increased through the course of the study period to 56.8%.
Great. So what's the story on activism's impact on the number of financial experts on the impacted boards?
Sure. Well, first, let's talk about the definition. At U.S. companies, ISS considers a director to be a financial expert if the board discloses that the individual qualifies as an audit committee financial expert, as defined by the SEC under Regulation S-K. Using this definition, activism added financial expertise to boards. The proportion of board seats at study companies occupied by these financial experts increased from 22.6% to 24.5%. The number of study companies with at least one, two, or three of these financial experts also increased.
Okay, Zach, finally on this part of the study, what role did company size play in the rate of refreshment at targeted companies?
Well, larger study companies were more independent, more likely to have female and minority board members, both pre and post activism, and more likely to have financial experts in the boardroom than smaller cap study companies. Relative to their larger peers, smaller study companies generally experienced more pronounced declines in average director age and tenure, but experienced more significant increases in average board size. Back to you, Pat.
Great, and Zach will come back as well for the Q&A segment later on. But now let's switch gears, and I'll hand the mic over to John for IRCI's perspectives on the study. John?
Thanks very much, and thank you to Pat and Andrew and Zach. From our perspective, to take a step back for a second and look at the entire phenomenon of activism, or at least part of the phenomenon. For activism to succeed, obviously, activists have to attract votes or support, or at least the perception of votes and support from non-activist investors. The key decision that other share owners make in deciding whether to support an activist campaign or to support an incumbent board is the activist goals and the activist investment philosophy for that company aligned with me, the non-activist shareholder who is considering it. And obviously, in the vast majority of cases, the situation-specific issues are key. Should there be a share buyback? Should there be a spin-off? Should there be a change in CEO? Whatever it is that the activist is arguing for or against. And that's why we often see these extensive, 50, 80, 100-page decks from activists opining on the strategy at a particular company. Next slide, please, Kelly. But there are also general governance precepts that seem to almost be disregarded or at least held in suspension for some time period during these situations, and that don't get as much play but are in the background. And so we get this sort of composition effect in which boards are chosen for those specific strategic issues that are encompassed in those 50 to 80 page decks or in response to them. You want skilled and relevant board members. You want board member independence. You don't want overboarding. Those issues aren't as much in the forefront as how does it relate to the specific issue. And there, where we're looking at the statistical evidence, you come up with a mixed bag and a mixed perception of how activism has affected board refreshment in comparison to the rest of the trends to board refreshment, which are encompassed in the study that Pat mentioned earlier. By the way, both this study and that study are available free of charge on the IRC Institute website, ircinstitute.org. Next slide, please, Kelly. And what you get when you look at these is, yes, the number of skilled and relevant board members goes up. There is more financial expertise, and because both sides do pick sitting executives, but as Pat and Zach and Andrew said, dissident slates tend to pick more financial expertise. Incumbent slates tend to pick more sitting, relevant corporate expertise. But the expertise and the skill set does go up. Board member independence goes up, although I will repeat the caveat that was mentioned earlier. This is a measurement of board independence from the company, not from the activist necessary. There's really, in the aggregate, no change in impediments to board members doing their job, for instance, overboarding, compared to the overall universe of board directors. But there are some extreme examples in which there are overboarded directors suggested. One gentleman was suggested 6 times at 6 different companies, and I think most people would consider it, and was elected. Most people consider that an overboarded situation. Activism does increase the refreshment rate of boards, decreases the age, decreases the tenure, increases the refreshment rate. So in the first 4 categories, you're directionally the same as the trend in the S&P 1500 universe for all directors. In one case, there's no material difference. But there is one very serious anomaly here. We have, as Pat and Zach and Andrew said, less diverse boards, less gender diversity, less visible ethnic and racial diversity, and not by a small amount. At the time when gender and racial and ethnic diversity was increasing in the S&P 1500, it was decreasing among the study directors and the study boards. The rate of nomination of female director candidates was half that of the S&P 1500 generalized refreshment trends. The number of boards without women decreased in the study boards, but increased in the S&P 1500. The same thing for ethnic and racial minorities. The rate of nomination was half that of the trend line of regular or the overall S&P 1500. And again, the number of boards with no ethnic or racial minorities was going down at the S&P 1500 overall, but up at study companies where there were activists involved. We are not opining as to the reason for this. We can speculate, but those are the facts. And I would like to thank ISS for, as they say, this labor of love combined with the earlier report. I think it gives a really good snapshot of what is going on in terms of refreshment trends with boards at the S&P 1500. And with that, I'll turn it over to Kelly to run questions.
Thanks, gentlemen. We're now on to the Q&A portion of the webinar. If you have any questions, you can see on your control panel, there's a question box. Just type your question into that. I'll read it aloud and we will respond. We already have several in the queue, and I'll just start running through those. The first one, does the report distinguish between activist shareholders, for example, Gabelli, and engaged investors, for example, ICCR, CalSTRS, or the SRI community?
Yeah, this is Pat. I'll take that one and see if my colleagues have any comments to make after this. But we really did focus on hedge fund activists, I think, and so we weren't looking at sort of the broader definition of activists and investors, I think, but we didn't make any differentiation based upon what those activist hedge funds call themselves. I know that some of them call themselves constructionists, different labels have been applied. We were basically looking at a set universe, and obviously this was driven by filings made by these entities. I think any further comments to add there, either Zach or Andrew?
Not on my end. I think you covered it.
Yeah, we didn't distinguish.
Thank you. Our next question, how did the study authors assess race/ethnicity of the directors?
Yeah, these are based upon, this is Pat again, our standard definitions when we're looking at boards. I think obviously gender is a little easier than race or ethnicity. When we do data collection, we really delve into great detail to try and ascertain, I think, what the backgrounds of the individuals are. But we actually left some of the directors out of the analysis on the ethnic and racial diversity side simply because we couldn't make an accurate assessment of their particular racial or ethnic background. I think so there are limitations just based upon what the SEC requires as far as filings and what companies provide for.
Thank you. Our next question, can you comment on the gender and cultural diversity on boards among different sectors?
Actually, I don't know if there were enough companies actually in the data set to make strong assessments on sectoral differences just because we're looking at less than 100 companies. Andrew or Zach, when you were going through, anything stick out to you on that basis, or was it just too small of a slice and dice of the data?
Yeah, I think the sample size was too small and we really didn't explore it.
Thank you. Our next question, what was your original hypotheses for the study? Did you expect diversity to be higher before you started?
I'll take that. There wasn't a hypothesis. This started with an overall board refreshment study that looked at the full S&P 1500, as we said. And among the other things we were looking at were all of these demographic data, as well as things like, do age limits matter? Do tenure limits matter? Does board does board evaluation disclosure matter? And again, we did a webinar on that earlier in the year, and the report is out and got fairly extensive play. As we were looking at the data that was coming in on that, we realized that there was the subset of activism-related refreshment. It seemed distinct enough that we wanted to break it out and do a little extra work on it. Additionally, activism is such a controversial topic that we were afraid that if we rolled it all into the same report, no one would actually pay attention to the overall questions, which are in some ways affect more companies and more people. And so we decided to do some extra work and just break it out separately. So there wasn't there was no ex ante thesis here the way there might be in an academic paper. It was solely an objective data collection exercise.
Thank you. Our next question, sort of a broad question. Can you comment on why activist interests are different or can be from other shareholders?
Sure, I'll take that one too. First off, we always sort of split out activists and other shareholders. The fact is that the entire shareholder community is heterogeneous, right? I mean, the holding period of a active mutual fund is different than the holding period of a passive mutual fund, may be different than the holding period of a pension fund, may be different than a sovereign wealth fund, may be different than an individual. So there's heterogeneity everywhere. The thing that people usually say about activists, the charge is short-termism. That is heavily debated. There's lots of academic literature that suggests that they are no more short-term than other investors. The other charge is financial engineering, and there is some academic literature that talks about changes to capital structure resulting from hedge fund activists, and that does seem to hold through, although what the effects of that are, again, have conflicting academic literature. So the main difference is the most obvious one. They are activists. They are willing to have an opinion, to express it, to do the filings, to file the regulatory results, to run candidates. And that when I say that the success of activism depends on attracting non-activist investors, that is clearly the main difference. If someone is taking a 5.1% stake to file a 13D, 13G type of filing, or if someone is taking a 9.9% stake to get up to the maximum they can prior to, or 49% stake, whatever the poison pill threshold is, they obviously have to attract 85 or 90 or 95%. The majority of those 85 to 95% of investors who are not in their activist group or the single activist who's filing, or again, at least give the impression that they could attract a significant proportion of them. And so in some ways, it sounds like a tautology, but it actually really is important. The main difference between activists and other investors is activists are running a campaign and other investors are sitting back and judging it and saying whether or not they believe in it. And that's why these issues of alignment are important.
Yeah, Kelly, if I could just jump in there a bit, I think, John and I have been doing this for a long time, I think, and I think we only have to look back really, 10 or 15 years to a time when most of the dissident investors who were out there that were doing board contests would simply go to their sort of stable of cronies and, put them up for the board. A lot of them would get overboarded very quickly. They'd serve on 5, 6, 7, 8 boards, I think, or they'd be putting forth some of the young analysts in their office who didn't really have a wealth of boardroom experience for these seats, I think. And I think that was sort of the stereotype that was out there. And I think one of the benefits of this study is it shows that sort of mythology, the stereotype of what sort of nominee the activists bring to bear has changed significantly, even over the course of the study period itself, I think, but certainly from 10 or 15 years ago, I think. And so I think it is instructive, and the fact that boards are often doing their own counter moves now, putting forth their own nominees, and we're seeing sort of real board contests on that basis where you have sort of a genuine choice between qualified candidates. So the whole nature of the boardroom challenge scene has changed significantly, but it's also what I like to call the sort of extreme makeover edition of Board Refreshment. I think quite often you'll see changes or turnover in 5, 6 seats on the board given one of these activist events. So you see literally, half a decade's worth of refreshment occur within a 12 to 18 month period. So it's definitely having an impact, but I don't think anyone's sort of standing still with the practices that were in vogue 20 years ago. And we just see a new style of selection of nominees. And I think we're even moving towards, it was reflected in the study itself, finding a greater number of women and hopefully going forward, ethnic and racial minority candidates as well. But I think it's one of those things where, if one side views that as competitive advantage, that'll definitely spur, greater competition in that regard.
Thank you. Our next question, do you have thoughts on why board diversity declined?
Well, again, in the S&P 1500, board diversity did not decline, it increased. It's in the study set that it declined, which is why or pointing out the anomaly. I do not have insight into why that anomaly exists. Pat, Zach, Andrew, I don't know if you do.
Yeah, this is Zach speaking. I can get into the numbers a little bit. When looking at the decline in female director representation on boards, this loss was largely due to just regular normal course resignations or retirements, but some were due to losing re-election at a proxy contest or as part of a settlement agreement. Of the study companies, there were 12 boards which did not have any female directors pre-activism, and after the activist period we measured, 4 out of the 12 boards added at least one female, but this increase was offset because there were 8 boards which had some female directors pre-activism, but those boards, for a myriad of reasons, had 0 females post-activism. There's similar reasons for the minority director representation on boards as well.
Thank you. Did I cut someone off? No. Our next.
Oh no. Nope.
Okay. Our next question: is this session being recorded? The answer to that is yes, and we will have that replay posted on the IRC website by tomorrow, and along with the presentation materials. And I think that clears out the queue of the questions. Let me just double check. Nope. Looks like that is all of our questions. So with that, we thank all of you for your interest and your participation in the webinar today. If you have any follow-up questions, Patrick and John and Andrew and Zach also are delighted to take those questions. Their contact information is here, and you can always reach out to us, and we'd be delighted to help respond to any of those questions. So again, we thank you for your participation, and we hope that you have a nice afternoon. Thank you.